Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing Joe Biden, the president-elect, and how his presidency might affect the markets long-term. What would Joe Biden's presidency mean for the financial markets? The Democrats headed by Joe Biden have lambasted Trump's policies over the last 4 years, and it's very likely that they will try and reverse many of the policies which were implemented by the Trump administration. One of the Democrats' election pledges was to impose extra corporate regulations, taxes, and healthcare spending, all of which would be negative for the stock markets in the United States, unless of course they are all healthcare related, or in the green sector, where Joe Biden has pledged to spend more money. In order to reduce greenhouse gases, Joe Biden has pledged to give the country a leading role in global efforts to curb climate change, a reversal in direction from the Trump administration, where Donald Trump withdrew from the Paris Climate Agreement in 2017. Another policy which helped Joe Biden to gain his votes was his pledge to penalize companies, presumably by taxation, that moved jobs abroad. This will have no doubt been a reason why the Midwest saw a surge in Democratic votes, because it is in the industrial heartland of America, the so-called Rust Belt. In a twist where investors might have bailed out of stocks due to potential shift in policy under a new administration, with regard to the higher taxes for corporations and more regulations which could tie the hands of corporate companies and potentially affect their earning capabilities, the markets have been erring on the side that the Democratic Party victory might be the quickest route to a generous government stimulus continuation pack. And this, of course, in the current economic uncertainties, would be a welcome thing. In the lead-up to the election, we can see here that the US dollar index, which is a measure of the dollar value against the basket of major currencies, prices fluctuated between 92 and 94 since mid-August, with pressure currently to the downside at the time of writing. One of the biggest gainers against the dollar has been the Swiss franc, where the USD-CHF pair fell below the 0.900 level on Friday the 6th of November, as the franc was being bought as a safe haven asset. The last time the pair hit this level was in 2014. Another asset which is bought in times of uncertainty is the Japanese yen, and here we can see that also on the 6th of November the USD-JPY currency pair fell below the key 104.0 level to reach 103.37, and analysts will be looking to the low in March of this year, where the pair fell below the 1.20 level and possibly to test the 101.0 exchange rate. While the euro and the pound have also made gains against the United States dollar, and the Dow Jones 30 Industrial Index has flattened just above 28,000, as buyers try to figure out the actual winner of the presidential election, which was Joe Biden, and what the Democratic policies are likely to do for the American economy as previously stated. Longer term, the markets will be looking at the Democratic policies, and also be looking for the will they won't they COVID stimulus package to be agreed upon by the Democrats and Republicans. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.